In money matters, the JSE All Share Index is up to a one-week high, prompted by gains in energy shares after better-than-expected industrial production, and retail sales figures for China prompted a commodity rally. Grant Nader is with Benguela Global Fund Managers. He is the senior portfolio manager there. He joins us for the latest market moves. Thank you very much, Grant, for your time this afternoon. Let's start with an overview of how the markets are faring so far.
Good afternoon. The markets are holding up quite nicely, up around 0.5%. We had a very strong day yesterday, particularly in the miners and the resources, and we're seeing a reasonable follow-through on that. They're holding on to those gains, most of them up again on the day, so that's very positive. Another stock that's performing really well is Richemont, up 4% on the day. Of course, they're quite closely tied to China and also Europe. The big news there being Europe talking about potential end to the rate hikes, and that has been a positive taken as a positive for the market. And then, of course, in China, we've seen some stimulus measures yesterday and some better economic data this morning, being retail sales data and manufacturing data. So there's a bit of an uplift in the markets at the moment, and hopefully we can see it feed through into next week. It could just be a little bit early to know if we've seen some real green shoots.
Fair enough. OUTsurance has published results for the year ended 30 June 2023 and the acquisition of US shares. Help us make sense of that performance.
Well, it was a really strong set of numbers. They grew earnings by, I think, 60-odd%. And if we just look at the two components first, South Africa did reasonably well. Premiums grew just below 9%. But they also saw an increase in claims related to load shedding, the normalization of the motor vehicle, driving habits of people post-COVID. So claims have increased there. But the real star of the show was Australia, the UE business shooting the lights out. And of course, they are buying the other 50% that they don't currently own for around 42.5 million Australian dollars, which actually looks like a really good price to me. The company delivered earnings of around 1.3 billion in rand terms just this last update. They saw a significant decrease in claims ratio of around 5%. They saw cost pressures come down. They managed their costs really well. The investment portfolio performed well, and they grew their gross written premiums about 21%. So on every line, Australia did tremendously well. Now, not all of that is repeatable because it's subject to external factors, but on the face of it, a great set of numbers, and it's seen OUTsurance come through with a significant increase in their dividend of over 100%, plus a special dividend on top of that. So it's good to see them doubling up on that existing business by buying the rest of it at what looks like a very good price, and a business that's doing really well for them.
Sibanye-Stillwater will enter talks with labor unions over a possible restructuring in one of its gold mines that could impact almost 3,000 people. What's going on?
Yeah, it's unfortunate news in the context of our country and our unemployment scenario. However, I think the bit of context is this mine has been struggling to make money for some time, even with gold prices as high as they are. They had some damaged infrastructure, and the mine has actually been offline since the start of August. Currently, there are 10,000 workers there, and they've struggled with productivity and profitability. And remembering also the history of Sibanye is they inherited a lot of high-cost, low-quality mines from gold fields, and so they are very difficult to operate, and they're very marginal. And so I think this is a symptom of that. And although it's unfortunate, it's very difficult if you're not profitable. You can't support these businesses on an ongoing basis.
But wait, there's more, Grant. Embattled retail holding company Steinhoff is going after its former executive, Mr. Grobler, demanding that he pays back nearly 300 million rand he was paid in salaries, bonuses and other incentives. How did we get here, and what are the chances?
Well, I mean, I think remembering how we got here, the question is what took so long. There was that PwC report a number of years ago now that implicated not only Marcus Jooste, but a number of his executive and directors as being a party, or at least knowing what was going on in the true financial situation. This particular gentleman was at one point in time director of Treasury and Financing, so very close to the underlying business. He was at Steinhoff for 19 years and pocketed obviously a tremendous amount of money at inflated profits and revenues to the cost of shareholders and the company. So I think the question is why only him and why so late? But it's good to see some action beginning to take place.
Let's take a look at the South African Reserve Bank. It's due to announce the latest interest rates decision next week. Knowing what we know now from the economic data we've seen so far, what's your prediction?
Well, so it's quite a complex question because we're unfortunately not subject to our own control in terms of inflation. The rand and the energy price, the oil price, has had a significant bounce. It's up again today. It's over 30% off its lows, and that's one of the biggest contributors to our inflation. So it puts the Reserve Bank in a tricky spot. Having said that, we do have one of the highest real rates in the world, which is the difference between our interest rate and our inflation. So I think I would expect the Reserve Bank to hold flat. I'm not expecting any further increases. I don't even think a cut is not even in the conversation. So it's really a question of how hawkish their rhetoric is. I think they're going to be careful and conservative and say we plan to hold rates at least where they are for at least the foreseeable future, and probably having to revise their inflation expectations slightly up, which is part of the trend we've seen in the last data coming out of the Europe and the US. It is an increase in inflation off the previous months. So there's a lot of moving parts. I'm hoping we just see a hold in rates.
From your lips to the bank's ears. Thank you very much, Grant Nader. He's with Benguela Global Fund Managers. He's the Senior Portfolio Manager there.